In this video, we are going to talk about ways to invest $1,000 in 2021. So before starting this video, please like this video and subscribe to this channel for our future updates. When you have $1,000 or less to invest, your options might seem limited. When the stock market crashes or is volatile like it recently is, those choices might even seem bleaker. The good news is some of the wealthiest investors in the world started somewhere. And although it doesn't get a whole lot of publicity, there are numerous options available for your small amount of money. Let's dive into our guide on how to invest $1,000 and make your money grow. Number 7. Lend to others. In the olden days, you would have to go to a bank or credit union and get approval for a loan. But peer-to-peer lending cuts out the middleman, allowing you to send a personal loan directly to someone else, and vice versa. Since these lending clubs operate online, they can save money on operating costs of traditional lending institutions like banks, passing on those savings to the borrower. P2P lending can result in a high average annual return for the lender, often between 7% to 11%. Some lenders can go even higher into the double digits. So, if you invest $1,000 and get a 10% return, you will get a net profit of $100, which isn't a bad return for an hour spent on a lending platform. Still, it's a risky venture. Since you're making a personal loan directly to the lender, they can default at any time. If that happens, you could lose your entire investment. The FDIC won't insure your loan in case of default. A list of some of the best peer-to-peer lending sites include Lending Club and Prosper. Both Lending Club and Prosper offer excellent options for P2P investing and give you a wide range of options to invest in to help spread out your risk. You can also get started with as little as $25, so your $1,000 will go a long way. Number 6. Try day trading. Playing the stock market isn't for everyone. Still, many newbie investors will run to day trading when deciding how to invest $1,000. If you understand the market, you can make a decent amount of money this way. But please recognize the risks of day trading first. According to FINRA, most day traders, those that buy and sell stocks 4 or more times in a business week, must maintain a minimum of $25,000 in capital. However, you can still day trade with $1,000. Just make sure not to break the pattern day trader rule. If you don't buy and sell stocks more than 4 times within a 5-day business period, you're good. Robinhood's commission-free investing is a great tool for day trading. You can quickly research stocks and make trades with just a few taps, trading in real time. With Robinhood, you can customize and build a balanced portfolio by investing in fractional shares, choosing how much you want to invest. Robinhood converts from dollars to parts of a whole share. Number 5. Invest in U.S. marijuana. In case you haven't been paying attention, North American marijuana stocks have been blazing hot throughout much of the year. But when given a choice, U.S. pot stocks have a substantially larger market at their disposal, with far fewer hurdles. There's virtually no chance of federal cannabis legalization in the U.S. prior to 2023, short of Democrats winning both Georgia Senate runoffs in January and state-level legalizations are piling up. With the federal government signaling that it'll take a hands-off approach to state-level regulation, there's not much standing in the way of U.S. cannabis stocks. For example, Green Thumb Industries (OTC) GTBIF should be very profitable on a full-year basis in 2021. Green Thumb has 50 operational dispensaries, but holds licenses to open as many as 96 in a dozen states. In particular, Green Thumb has chosen to focus on Nevada, which should lead the country in cannabis spending per capita by mid-decade, and Illinois, a potential billion-dollar market that waved the green flag on adult-use sales on Jan. 1, 2020. Number 4. Invest in cybersecurity. One of the many things we've learned in 2020 is that cybersecurity isn't an option. Rather, it's a basic need service that businesses of all sizes will need moving forward. As the world becomes more digital, the onus of protecting enterprise and consumer data is going to fall on cybersecurity companies. According to Grand View Research, the global cybersecurity market is forecast to grow by 10% annually, hitting $326.4 billion in sales by 2027. This may not be the fastest growing industry in 2021, or over the next couple of years, but it has the safest floor of any high-growth industry. A name that really excites me here is CrowdStrike Holdings, Nasdaq, CRWD. CrowdStrike's cloud-native Falcon platform is cheaper than on-premises security solutions, and is responsible for monitoring over 3 trillion events per week. Recently, the company announced that 61% of its customers now have 4 or more cloud module subscriptions, which has more than doubled from 27% 3 years ago. Consider any significant pullback a buying opportunity. Number 3. Invest in personalized precision medicine. Even if a multitude of successful vaccines brings a halt to the pandemic in 2021, it's pretty clear that healthcare services designed to personalize the treatment process and improve convenience are going to remain hot for a long time to come. Though estimates vary on Wall Street, most analysts are calling for global precision medicine growth of 10% to 12% annually over the next 5 to 7 years. Again, not the fastest growing industry, but one with an exceptionally safe floor. A quick look at the operating performance of telemedicine company Teladoc Health, NYSE, TDOC, shows how powerful and sustainable the precision medicine trend can be. Teladoc has seen virtual visits more than triple from the prior year period during the COVID-19 crisis. Yet, sales grew by a compound annual rate of 74% between 2013 and 2019. With Teladoc acquiring Applied Health Signals company Livongo Health in a cash and stock deal, it'll now be able to remotely monitor patients with chronic illnesses, connect patients virtually with physicians, and cross-promote its products with ease. Number 2. Invest in cloud infrastructure. Another smart way to put $1,000 to work in 2021 is by investing in cloud infrastructure stocks. I don't doubt we're going to see all facets of the cloud continue to see money inflows next year. But in the wake of the pandemic, businesses have realized how important it is to have an online presence, and how crucial data sharing and remote work can be. That's why the building blocks of the cloud are going to be such a hot commodity in next year. Last year, IDC released a 5-year forecast on public cloud service and infrastructure growth, calling for a compound annual growth rate (CAGR) of 22.3% between 2019 and 2023. Specifically, infrastructure as a service stocks are expected to be fastest growing trend within the cloud, a CAGR of 32%. Though Amazon is the clear market share leader of cloud infrastructure services, it's Alphabet, Google that might offer the best growth potential. Alphabet's Google Cloud is growing at a much faster pace than Amazon Web Services. Google Cloud also generates considerably better margins for Alphabet than its ad-based revenue. Over time, these juiced-up margins should seriously expand its operating cash flow. Number 1. Invest in gold miners. You might not think of gold stocks as being unstoppable, but in 2021 they could seriously shock Wall Street. With close to $17 trillion in global investment-grade debt bearing a negative yield and the Fed unleashing an unlimited quantitative easing program to support the U.S. financial market, it's created the perfect scenario for physical gold to shine. At the same time, we've watched gold miners spend the past 5 to 7 years reducing their net debt by selling non-core assets and focusing on mines that offer high-yield ore. As the price of physical gold spikes, gold stocks are enjoying their best financial situation in a long time. Yamana Gold, NYSE, AUY, is one name that should be a prime beneficiary of higher gold prices. Yamana has slashed its net debt over the past 5 years, all while binging Cerro Moro online and increasing output at its Canadian Malartic mine, where it owns a 50% stake. Yamana's operating cash flow should rocket higher in 2021 as its gold equivalent ounce production grows by low double digits and tops 1 million. What do you think of our video? Where you invest $1,000? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.